Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Markets endured another volatile week as recession fears, trade policy uncertainty, and inflation concerns dominated headlines. U.S. equities extended their losing streak, with all major indexes posting a fourth consecutive week of declines. European stocks struggled amid ECB rate cut uncertainty, while Japan saw encouraging wage growth. Meanwhile, China's markets gained on stimulus hopes despite persistent deflation concerns. Let's dive into the details. US stocks tumbled for another week, with the S&P 500 entering correction territory and the Nasdaq plunging more than 8%. Small-cap stocks fared even worse, with the Russell 2000 down over 8% year-to-date. The sell-off was driven by a combination of renewed trade war fears and rising concerns that the US economy is losing steam. The Trump administration announced fresh tariffs, raising fears about supply chain disruptions and higher consumer prices. February's CPI report showed a softer-than-expected 3.1% year-over-year rise in core inflation. The Producer Price Index, PPI, also surprised to the downside, but some underlying inflation components remain elevated. The University of Michigan's Consumer Sentiment Index plunged 11% to its lowest level since 2022. Reflecting growing anxiety over inflation, job security, and stock market volatility. European equities faced another challenging week, with investors grappling with trade war spillover risks and central bank uncertainty. President Christine Lagarde warned of exceptionally high uncertainty, while some policymakers pushed back against further easing, citing persistent inflation risks. The incoming German government secured backing for a $500 billion infrastructure plan, signaling a potential economic stimulus. The UK's GDP unexpectedly contracted by 0.1% in January, adding to concerns that high interest rates are dampening growth. Japanese stocks eked out small gains, supported by a weaker yen and strong wage growth, though trade war concerns limited upside. Japan's annual Shunto wage negotiations delivered a third consecutive year of strong pay hikes, reinforcing expectations that the Bank of Japan, BOJ, may raise interest rates again later in 2025. The yen slid to 148.7 per US dollar, boosting exporters but raising concerns about imported inflation. BOJ Governor Kazuo Ueda signaled that rising bond yields reflect natural market trends, but suggested intervention would be limited to extreme volatility. Chinese markets rallied on optimism that policymakers will unveil fresh measures to boost consumption, even as deflation concerns persist. Officials from China's finance and commerce ministries will hold a press conference Monday focused on pro-consumption policies. CPI fell 0.7% year-over-year in February, the sharpest decline since early 2024, while core inflation also turned negative for the first time in 15 years. The prolonged real estate downturn continues to weigh on consumer confidence, despite previous stimulus measures. The Commerce Department will release retail sales figures, providing insights into consumer spending trends. This index offers a snapshot of manufacturing activity in New York State, serving as an early indicator of economic health. These metrics shed light on the housing sector's momentum and future construction plans. The Federal Open Market Committee, FOMC, will announce its rate decision, with expectations of maintaining current rates. Investors will closely analyze the accompanying statement and economic projections for future policy direction. This index provides insights into manufacturing conditions in the Mid-Atlantic region. Data on previously owned home sales will offer clues about the housing market's health. Final inflation figures will be released, influencing European central bank policy considerations. The BOE is anticipated to hold rates steady amid ongoing inflation concerns. The SNB will announce its monetary policy stance, with markets watching for any shifts amid global economic uncertainties. The BOJ will announce its policy stance on March 19th. While rates are expected to remain unchanged, markets are attentive to any signals regarding future hikes, especially with projections suggesting a possible increase to 0.75% in the third quarter of 2025. Also set for March 20th, this indicator offers a glimpse into capital expenditure trends within Japan's private sector. Scheduled for release on March 20th, this data will provide insights into Japan's inflation trends. Analysts anticipate a slowdown in core inflation to 2.9% from January's 3.2%, largely due to the resumption of energy subsidies. On March 17th, China will release combined data for the first 2 months of the year, offering insights into the country's manufacturing and industrial activities. Also, on March 17th, this release will shed light on investment trends in infrastructure and property sectors. This data, due on March 17th, will provide an overview of consumer spending patterns in the early part of the year. Set for release on March 17th, this figure will indicate the health of China's labor market. On March 20th, China will announce its 1-year and 5-year LPRs, which serve as benchmarks for lending rates. The current rates stand at 3.1% and 3.6%, respectively. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.